Good morning, friends. In today's lecture, we are going to see two topics. Okay, you know that first unit almost we have completed, and in today's class, I will discuss about some of the topics from unit 2. Okay, so in unit 2, you can see that there are two very important topics as far as the university examination is concerned and as far as its importance is concerned. So we will look at first topic is difference between fundamental and technical analysis. This topic I will take second, and the first topic which I am going to take initially is factors affecting price of securities. Okay, so these two topics in today's class I am going to discuss. Okay, and you can see that these two topics are very important. What are the you know that price of securities, many kinds of there are many kinds of securities. Here we will be concerned about the share prices mainly. With the example of share prices, we will talk about the factors which are affecting the price of securities. Okay, you know, so what are the factors which are affecting the price of securities? That would be our first topic. The second topic is difference between fundamental and technical analysis. You know, uh, this fundamental and technical analysis, about the financial market, how we do fundamental analysis of financial market, and how do we do about technical analysis of financial market. That is what our topic is. That topic I will discuss in detail. Let me first take the factors affecting price of securities, mainly share prices. Friends, in this slide, you can see that there are some factors which are affecting the price of securities or shares, which we are going to see here. So first factor which is going to affect the price of securities, which is going to determine the price of securities and shares, is demand and supply. Demand and supply in the market affect the price of shares. When demand for shares exceeds supply, which means the buyers are more than sellers, the prices increase. This is very simple thing. And when the demand is less than supply, meaning that buyers are less than sellers, the prices decrease. So demand and supply of any kind of securities determine their price first of all. This is the first basic criteria: demand and supply. Second, second topic, or second factor which affect the price of securities or shares is interest rate. How interest rate? So you can see that in case of lower interest rate, demand for funds will be higher, because at lower rate of interest will demand investor will demand more funds. So it's fun, they will have more funds, and the subsequent demand for shares will also rises. In the same opposite way, you can say that on the other hand, high interest rate lowers the demand for funds, and consequently demand for shares is lower. Okay, so interest rate affect the price of securities. Okay, the third you can see that third factor which affect the price of securities is investors. Okay, market players have an impact on share prices. With more bulls than bears, the prices increase. You know that when bulls who believe that market is going are going up, so generally they buy. So in that kind, if bulls are more than bears are the investors who think that market is going down, so will they will short sell. They will sell the securities. So in that way you can see that when bulls are more than bears, the prices increase with, and in opposite way, more bears than bulls, then share prices will decline. Okay, this is very, this investors, what kind of investors are there, that also affect the price of securities. Another very important, factor is dividends. Dividend indicate the movement of share prices. Okay. When companies make dividend announcement, the share prices of such companies are likely to increase. Remember, it is important to note that if the dividend rate announced is lower than the investors' expectation, share prices decline. While if they are up to more than expected, share prices increase. So how companies, dividend policy will have profound impact on the price of securities. Okay, this is very important, factor which affect the price of security. Another, very important point is management. Management profile has a significant effect on company success and stock prices. If management consists of experienced professionals with a proven track record, share prices are likely to be higher. If the management that takes over a company lacks integrity, share prices tend to fall. Okay, so you might have heard so many examples in real world, that if any big and proficient company acquires small company, the small companies share prices increase very profoundly. So that is what, if management plays a very important role. Okay, so these are the very important factors which affect the price of security. Another, very important, top factor is economy. Okay, the fluctuations in the economy feature what was commonly referred to as booms and depressions. Under favorable conditions, okay, share prices are at their peak and that lower point is experienced during depression. So economic conditions, business cycles, they are generally called business cycle. When there is a boom in the market, when there is a positive climate in the market, then share prices increase. When there is a negative market, depression, recession in the market, share prices decrease. So these are very important point. In this slide we have covered all the very important this factors which affect the price of securities or shares. uh, Try to understand the next topic which are we are going to take after this topic, fundamental and technical analysis. This whatever factors we are seeing here, they are more or less part of fundamental analysis. Okay, they affect the fundamental, they affect the fundamental analysis more. Yeah, no doubt it affect the technical also, but technical analysis deals with more with graphs and technicalities. So anyways, we'll look at that. But here you should understand that factors which affect the price of securities or shares, these are very important factors like demand and supply of securities, interest rate prevalent in the market, what kind of investors we have in the market, what company's dividend policy, management of the company, and economic conditions prevalent in the market. These all affect the price of securities. Some of the other factors also we will see in the next slide. In this slide, friends, you can see that other factors which affect the price of securities are given here. I will discuss one by one. Uh, Political climate. Political factors that range from relations with other nations to government policies can affect share prices. Definitely, you know that the government policies affect share prices very significantly. So this is very important factor. Then, short term and long term investors. Different investors rely on different factors. A short term trader or investor is likely to prioritize and incorporate technical factors such as inflation, trends, and demographics, while long term investors focus on fundamentals like earning power and acknowledge the crucial role that technical factors play. Investors who prioritize fundamentals can integrate technical factors. Okay, In this way, what kind of investor exists? There are short-term investors or long-term investors, their priorities. These all also will affect the price of securities. It is widely believed that market sentiment and technical factors are overwhelming on a short-term basis, but fundamentals ultimately set share prices in the long run. Okay, so market sentiment and technical factors affect the share prices for the short period of time, while long term price, the actual price long term will be decided by the fundamentals. Okay, since conventional theories are not sufficient for explaining all the things that go on in the market, behavior finance or market sentiment will always be a keen area of interest. You can understand this, that there are many conventional theories which are not able to explain the sentiments of market. Now many new like behavioral sciences and behavioral economics is coming into being, and which tries to explain the price determination of securities in the market. There are other consideration also, means I have mentioned in this. You can see that stock prices change for various reasons. While some people believe that it is impossible to predict the changes, others think that observing past price movements and charts can determine when you should buy and sell. This is basis of technical analysis. You can see that in technical analysis we can say that when prices go up and when prices go down, we can predict by studying the charts. Okay, then stocks are volatile, which means that prices can rapidly change. Fundamentally, demand and supply in the market influence share price. Comparing the share price of two different companies is not conclusive when determining the value of the company. Earnings affect how investors value companies, but other indicators are used for the purpose of predicting stock prices. Stock prices are affected by investors' expectation, attitudes, and sentiment. Here you can see that many times price of securities and shares are affected by the earnings of the company, but many other indicators also affect the stock prices, like investors expectations, their attitudes, sentiment, market sentiment. So in this way you can see that there are many factors which affect the price of securities and shares. Now let me discuss the difference between fundamental analysis of financial market and technical analysis of financial market. What is the difference between these two? If you want to study the financial market, there are two approaches. First approach is fundamental approach, and the second approach is technical analysis approach. Okay, so what is the basic difference? Let me talk about fundamental analysis of, or fundamental approach. In fundamental approach, what uh, a student does, if I want to study the financial market, if I what as an investor, as a trader, if I want to invest or trade in any financial market, want to do any transactions, so as a fundamental, if I believe in fundamental approach, what I will do, I will study the fundamentals of financial market. If I want to invest in any company, what I will see, I will see the fundamentals of that company. What is the earning capacity of that company, how the structure of investment of that company, how the future prospects of that company, how the management is working, in in financial market. This is means we are talking about any particular company, that if you want to invest in stocks of any company, you will check its fundamentals. In the same way, if you want to see the trend of financial market, what you will see, you will see the fundamentals of economy, how the economy is working, how the government policies are there. All these fundamentals, if I study, that is the fundamental analysis of financial market. If I want to understand a financial market fundamentally, So I will see the fundamentals. What are the fundamentals? The earning capacity, the economic policies, the government policies, how economy overall is doing, what are the threats, what are the opportunities in front of uh, the economy. All these things, all these things, the fundamentals, how the things are going on actually, how the prospects are there, how good or bad we are doing. So all these things, if I study, that is called as fundamental analysis of financial market. Okay, all these things we will study in fundamental. Now uh, compared to this fundamental analysis, and this will be generally, fundamental analysis is for long term. If any person wants to invest in any in stock market, or if any financial market, if he is a genuine investor and wants to invest for long term, he should see the fundamental of is he should depend on the fundamental studies. Fundamentals should be clear, how the stocks and stock market or financial market is going to do in the long term. That depends on the fundamentals. Generally it is believed in a fundamental approach, it is believed that the long term and the long term prospects of any financial market depends on the fundamentals of all the fundamentals, whatever we have discussed. Okay, apart from this, there is another approach called technical analysis approach. This technical analysis of financial market, there are a number of books. One very good book is Technical Analysis of Financial Market by John Murphy. In this approach, you can see that if a person wants to invest, or most means more importantly, if he wants to trade in day to day, or mainly intraday trading, if you want to do, the person generally relies on the technical analysis. In technical analysis, what is done in technical analysis, using the uh, uh, different kinds of diagrams, different kinds of average tools, and different kind of statistical and quantitative methods are generally used. Statistical methods generally used. Chart analysis is done, and all these things, based on this chart analysis, based on this, the positional analysis, all these things, technicalities of particular stock or stock market is generally analyzed, and that particular, based on those criterias, generally uh, intraday traders are working. Okay, you if you read the book by John Murphy, Technical Analysis of Financial Market, a lot of emphasis is given on the trend. Okay, how is the trend? And trend is determined based on might be larger trend, you know long term trade, or short term trade, or intraday trade also. This is generally analyzed based on the graphs. Okay, trend graphs, and all the theories are um, uh, theories are generally made based on the graphs. You see the a lot of use of graphs, and one particular that kind of graph generally used, that is means Japanese candlestick graphs. Those those kind of tools, that technical tools, are generally used in technical analysis. And a technical analyst, what he does, he use many statistical tools and graphical tools, and do the technical analysis, and based on technical analysis he predicts how the stock prices are going to behave. So there is a difference between fundamental analyst and technical analyst. Fundamental analyst will believe that stock prices or financial market, stock market generally behaves as per the fundamentals. How fundamentals change, there would be changes in the behavior of market. But technical analyst persons believes in the graphs. He thinks that in graph and in this particular trend, all market is already discounting all the information. He believes that market discount everything. Okay, market knows everything, and all the information which is available, it is already you know uh, uh, it is already reflected in the market prices. Okay, so technical analysis will see that according to the graphs, he will say that he will predict that how the stock market and financial trend will go. Okay, so in this way you can understand the difference between fundamental analysis of financial market and technical analysis of financial market. There is this thing you can, when you read in books, you will understand that how fundamental analyst will focus on some of the very fundamentals and fundamental things like economy and earning capacity and government policies and all these things, while technical analysis will focus on the trends and graphs and different kinds of graphs and different kind of averages it will use, and it will predict the prices. So there is a some difference between this two approach. Okay, so try to study this thing. I have covered today two topics. One is factors affecting price of securities. You should understand these factors, and after listening this second topic, that is difference between fundamental and technical analysis, you can understand how this price is uh, how these are the different kind of factors which affect price of securities. So in this way, these two topics I have made clear. If you have any doubt regarding these two topics, you can just WhatsApp me your question in the same group where I am sending this link. So thank you so much.